I am AI, avatar of CA Ratan Mundra. The Central Board of Indirect Taxes and Customs, also known as CBIC, has issued a crucial clarification through Instruction Number 6 of 2026, Customs, dated the 27th of April 2026. This clarification focuses on the eligibility of drawback under Section 74 of the Customs Act 1962, specifically in cases where goods move from special economic zones to the domestic tariff area and are later re-exported. This update is highly relevant for exporters, SEZ units, DTA buyers, consultants, and finance professionals because it resolves a long-standing confusion in customs practices. For many years, businesses faced inconsistent treatment from different customs formations across India. Some officers treated SEZ to DTA movement as a domestic transaction instead of import, and therefore denied drawback under Section 74 when goods were re-exported. This led to unnecessary disputes, delays, and most importantly, blockage of working capital for companies that had already paid customs duty. To understand the clarification, we must first look at the legal framework. Section 30 of the SEZ Act states that when goods move from SEZ to DTA, customs duties are applicable just like imports. Additionally, for trade and taxation purposes, SEZ is treated as a foreign territory within India. This creates the foundation for treating SEZ to DTA movement as import-like. Section 74 of the Customs Act allows refund of duty when imported goods are re-exported. However, three key conditions must be satisfied. First, customs duty must have been paid. Second, the goods must be easily identifiable. Third, the goods must be re-exported within the prescribed time and procedures. These conditions remain fully applicable even after this clarification. CBIC has clearly stated that goods cleared from SEZ to DTA on payment of duty will be treated as imported goods for the purpose of Section 74 drawback. This means that if such goods are later re-exported, drawback cannot be denied merely because they originated from SEZ. This instruction is binding on all customs formations, ensuring uniform application across India. Earlier, there was no consistent approach. Some customs officers rejected claims based on a narrow interpretation of import. Now, CBIC has removed this ambiguity by confirming that SEZ to DTA duty-paid goods qualify as imported goods for drawback purposes. This is not a change in law, but a significant administrative clarification that aligns practice with economic reality. This clarification has major practical benefits. Companies will now experience faster recovery of duties, improving their cash flow. It reduces unnecessary disputes and litigation, saving time and cost. Most importantly, it allows businesses to plan re-export transactions with greater certainty and confidence. Even with this clarification, compliance remains critical. Businesses must maintain proper documentation such as SEZ to DTA bill of entry, duty payment challans, invoices, and shipping bills. They must also ensure that the goods re-exported can be clearly identified through serial numbers, batch numbers, or product specifications. Without proper documentation, drawback claims may still be rejected. While this clarification solves one problem, another important issue remains unresolved. When duty-paid imported goods move from DTA to SEZ, such supplies are treated as exports under the SEZ Act. However, Section 74 drawback eligibility in these cases is still unclear and inconsistently applied. A further clarification from CBIC is needed to ensure complete tax neutrality. Businesses should immediately review their pending and rejected drawback claims involving SEZ to DTA transactions. They should strengthen their documentation and ensure proper correlation between import-like clearance and re-export. Where claims were rejected earlier, they should consider filing representations or appeals based on this CBIC clarification. In conclusion, this is a welcome step towards fairness, consistency, and the principle that exports should not carry the burden of taxes. Moon Says and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support, and handling compliances, risk management. Renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university BATF, and ancillary regulations and fintech. Expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network. scan the QR codes below to stay connected with us.